Welcome to Markets Now. I'm Michelle Rook with Vince Boddicker, Farmers Trading Company, and we did see mostly lower closes with the exception of the hogs today. And Vince, let's talk about especially the greens and the cattle. It felt like a risk-off day, a little bit of spillover from the stock market.
I think so. All in all, it's still in the back of people's minds. It's not near as big of a deal in the grains, as you know, as it is in the cattle market. And I think all in all, the cattle market held up fairly well in the fat end of things, of being 30 lower or less after the stock market gets plummeted 1,200 and some points. But see what we do the next few days. I think the other interesting thing that stuck out today in the live cattle market is many of those contracts fill the gaps that they left a couple of weeks ago when the Dow got pounded in there on tariffs. And we couldn't do much more than that. So was it an ideal of let's fill these gaps and then take profits and longs, and other people came in and sold because it was there. And I think how we move over the next few days becomes important in there. I think we need to put new highs in. If not, those may be some areas, if there's producers that need to put some protection on cattle, rallies near to Monday's highs is something to look at as far as a place to do it with limited risk.
Yeah, I want to dig a little deeper into the cattle in a moment, but talking about the grain trade, we also had some chart areas that we have been unable to take out, those last week highs, right?
Definitely. You get that mid 490s in the July corn contract, low 490s, and you look at May, looking at July beans in that 1055 to 1060 area, just a tough area. And like anything else we're doing, if you don't have that good news, but you're not going to push through it. So what that takes, I don't know. But I don't think we fall out of bed in the grains. But could you get some healthy corrections in here to encourage more buying? We sure could.
Yeah. So you mentioned the resistance areas we've been unable to take out in some of these grains, including the 200-day moving average and the soybeans. What is it going to take to get us through those levels here if the funds are buying?
Right now, barring anything that's not expected, it's got to be some type of a weather event, whether that be that we continue to rain in that eastern corn belt and it slows down planting, or it shuts off and it gets dry a month from now. But I think it's something like that. Again, barring some other news that we wouldn't expect that could get us going, such as gold soaring even farther than it has so far.
So if you look at the Commitment of Traders report last week, we saw, I think, combined almost 200,000 contracts of managed money buying, basically on the long side of the grain market. And so where do you think that fund money, why is it coming into that space?
Again, I think we look at the US dollar being lower. We need to look at new all-time highs in gold on Monday, some good pushes again on silver the last week or so. Weakness in that stock market. You got to wonder if managed money doesn't say maybe we get some inflation coming in because of gold and tariffs. So let's take money out of the stock market when it looks a little sketchy in here and put it in the commodities and see what we can get for a return.
All right, market was also, I think, watching weather, at least in the case of the wheat market, right?
Yes, definitely. We much better chance of rain in those winter wheat areas where they need it. I think northern areas still look a little sketchy, but Kansas and Oklahoma, Texas could get some. We did upgrade the Russian wheat crop again on Monday. And again, still probably the last smallest crop in the last 4 years, maybe the better way to put it. But if we're increasing the likelihood of a little bit bigger crop, the market still goes in that direction.
Yeah, certainly a lot of talk last week about concerns about maybe some planting slowed down because of the heavy rains in parts of the eastern and southeastern corn belt. What are we seeing there, and is it too early to be concerned?
You know, they should be planting by now, but they've got some stuff done already. As long as we didn't do too much damage on the heavy rains, which I don't think we did as far as flooding. But you probably have to get into that mid-May before they're going to get real excited and say we've got a problem here.
Yeah. So one of the other things that was interesting to watch is we had a huge pullback in the dollar today, which is usually commodity friendly, but it didn't seem to help the greens that much today.
It didn't. And again, psychology is still the key in here. And as we look at it, are we tight on world corn supplies? When you look at it, yes, is this U.S. really tight? Not terribly. And we're looking at adding 3-4 million more acres of corn. I think all of that adds up to the fact that the US dollar being lower is helpful, but we're going to take something more than that unless we can get that US dollar below 92 to 93. Then I think it kicks in a little bit better as far as where we get competitive.
Yeah. The other thing that we've been watching is the developments with these USTR's Section 301 Chinese shipping fees. And it looks like we've gotten a little bit of a reprieve on that. A delay, bulk shipments look like they're going to be exempt. How big of a deal was that for the industry?
Well, definitely, it adds some positivity to it. You know, we've got the tariffs, and if we don't have to worry about at least any of those tariffs and other charges going on to the shipping, at least it helps somewhat on that side of it.
So you mentioned earlier, cattle market had a down day because of the stock market. So obviously that overwhelmed the strong cash trade that we saw.
Yes, and again, we still didn't put in any new recent highs, but a nice rebound. And the real question gets to be, how tight is that packer on what he needs? Is he going to have to bid up again this week? And that becomes the real key. We look at that Southern trade last week, right at 209 for the bulk of it, right where the April contract is at that goes off next Wednesday. Unless cash goes a lot higher, that market can just stay quiet for the next week.
Yeah. How important was it to fill the gaps on the charts that you mentioned?
You know, if you would ask me that question a few years ago, I would have told you I don't think it's a big deal. But it seems the last 3 or 4 years, the market really goes after that gap no matter what commodity it's in. So I think it's an important factor. The bulls that were looking to do that got it accomplished. Now the real question, do they have enough ammunition to keep pushing it? Or is this a place where the bears are going to come in and take control short term?
Right, because they've actually, I guess, parlayed down their long position a little bit in the live cattle futures. They're still long about 100,000 or over 100,000, according to Commitment of Traders report. Do you think that they keep kind of shedding length on strength, or what happens?
I think they might short term, especially if the stock market continues to be weak in here. They shed a lot of it here until a few weeks ago when they start putting it back on again. So you're at levels that maybe you're going to call it more normal for a high that would be put in here by the length that they have. So I would think they're going to keep shedding unless something changes with the stock market and the overall economy.
Yeah, and the hogs, they were higher all by their lonesome today. Is that the strength that we're starting to see in the cash and the cutouts that pushed that, or was that fun buying, or what?
I think it was a combination of all of those. You've had some stronger cash. You're still at some pretty lofty levels for where we are this time of year with the cutouts. Um, you're looking at last week, we finally got those summer months to get over that 200-day moving average. They're finding resistance at the 100-day moving average. You also have to worry about if that century mark on prices in those summer months isn't going to be a short-term hurdle. They get through that, then maybe we can push another $4 or $5.
Yeah, but what's it going to take to get us over that hurdle?
I think you got to have continued good demand on that cash side and in the product market. And the key seems when you've gotten rallies in those hog market is the belly side of things. And you had a nice rally earlier. You took most of that away a few weeks ago. I think you're building some length back into that. And you're getting to that time of year where that should be somewhat of a feature. And if it is, the market can be okay. If it's not going to be a feature, it's going to be tough to push a lot higher.
Yeah, good point. All right, thanks so much. Vince Boddicker with Farmers Trading Company. That is Markets Now.